The Union Budget 2025-26 has brought a revolutionary change.
There will be no income tax payable up to income of 12 lakh rupees.
Finance Minister Srimati Nirmala Sitharaman has announced that individuals earning up to rupees 12 lakh annually will pay zero income tax. Yes, you heard that right. If your income tax is rupees 12 lakh or below, you won't pay a single rupee in tax. Plus, tax slabs have been restructured to lower tax rates for everyone. But how does it work? Let's break it down. Before this budget, the tax structure was quite different. If your income was below rupees 3 lakh, you paid no tax. But as soon as you crossed rupees 3 lakh, you were taxed at 5% up to rupees 7 lakh. From rupees 7 lakh to rupees 10 lakh, the rate jumped to 10%. Then, for income between rupees 10 lakh and rupees 12 lakh, the tax rate was 15%. It further increased to 20% for earnings up to rupees 15 lakh, and if your income exceeded rupees 15 lakh, a hefty 30% of your earnings was taken as tax. This structure meant middle class earners paid a big chunk of the income in taxes, but the new 2025-26 tax slabs change everything. Let's see how. Here's how the new tax slabs look. If you earn up to rupees 4 lakh, you pay absolutely nothing. From rupees 4 lakh to rupees 8 lakh, the tax rate is just 5%. From rupees 8 lakh to rupees 12 lakh, it's 10%. Then from rupees 12 lakh to 16 lakh, you pay 15%. For rupees 16 lakh to rupees 20 lakh, it's 20%. From rupees 20 lakh to rupees 24 lakh, the rate increases to 25%. And finally, for incomes above rupees 24 lakh, the tax rate is 30%. Let's see the tax difference between both the regimes. As you can see here, the highest 30% tax bracket now starts at rupees 24 lakh instead of rupees 15 lakh. This means both higher income earners and the middle class benefit lower taxes and more savings, a win-win for taxpayers. But how does this actually affect your salary? Let's take an example and find out. So, the question is, how much tax do you actually end up paying? Let's take an example. Meet Anshul. He earns rupees 12 lakh per year. How much tax will he pay under the new tax regime? Let's break it down. From rupees 0 to rupees 4 lakh, he pays zero tax, absolutely nothing. From rupees 4 lakh to rupees 8 lakh, he pays 5% on rupees 4 lakh, which equals to rupees 20,000. And from rupees 8 lakh to rupees 12 lakh, he pays 10% on rupees 4 lakh, which comes up to rupees 40,000. Adding it all up, rupees 20,000 plus rupees 40,000 is equal to rupees 60,000. So Anshul's total tax payable is rupees 60,000 under the new tax regime. So now the question is, if this calculation says Anshul has to pay rupees 60,000 in tax, then what do we mean by no income tax up to rupees 12 lakh? You must be aware that every March as the financial year ends, you or your CA file your income tax return. During this process, the government reviews your taxes and provides a refund, and this is where tax rebates come into play. Previously, the maximum rebate available was rupees 25,000, but now it has been increased to rupees 60,000. So, Anshul is eligible for a total rebate of rupees 60,000. This means that at the end of the year, the entire rupees 60,000 he paid in taxes will be refunded to him. Effectively, he pays zero tax. This is not the complete picture. There is something called cess and deductions. Let's see how it affects your taxable amount. Think of cess as a small additional charge added to your tax. It is levied by the government, usually to fund public welfare programs like health and education. For example, the education cess helps fund midday meals for students and salaries for government school teachers. Similarly, the health cess helps fund public health care programs, free medical treatments, and government hospitals. Since cess is calculated as a percentage of the tax you pay, not your income, it slightly increases your total tax liability. Let's break it down with an example. If a person's tax is rupees 300, a 4% cess means he pays an extra rupees 12. So his total tax becomes rupees 312 instead of rupees 300. Now that we understand cess, let's look at deductions, smart ways to lower taxable income. Investing in government approved sectors that help the economy can help you save on taxes. These include provident funds, life insurance, and many more. As you can see on the screen, if you invest in these options, the government won't tax that portion of your income, helping you save more. To better understand this, let's take the most common deduction for salaried employees, the standard deduction. The standard deduction is a flat deduction applied to the total salary earned in a financial year, reducing taxable income. As of now, this amount is rupees 75,000. Let's see an example to understand how it works. Let's take an example. Neha earns rupees 30 lakh per year. After applying the standard deduction of rupees 75,000, her taxable income is rupees 29 lakh 25,000. Now let's break it down. Neha's tax based on the new tax slabs. From rupees 0 to rupees 4 lakh, she will pay no tax. From rupees 4 lakh to rupees 8 lakh, she will pay 5% on rupees 4 lakh, which comes to rupees 20,000. From rupees 8 lakh to rupees 12 lakh, the tax is 10% on rupees 4 lakh, making it rupees 40,000, and so on for the next brackets. When we total up all the tax amounts, Neha's total tax payable comes to rupees 4,57,500. However, there's an additional 4% cess on the tax payable for Neha. This amounts of rupees 18,300. So, after adding the cess, Neha's final tax payable is rupees 4,75,800. Let's compare this to the previous tax regime where Neha would have paid rupees 5,90,200 in taxes. Under the new system, she will pay only rupees 4,75,800, which represents a 24% decrease in her tax liability. So it's clear the tax benefits from 2024 to 2025 are significant. Let's see a bit in detail. For example, at the 8 lakh rupees tax slab, the benefit is around rupees 30,000 and it increases to 1.1 lakh for incomes above rupees 24 lakh. This structured reduction in tax liability ensures more take home income for individuals. Overall, the middle class is getting substantial tax relief with either zero tax or significantly reduced tax liability. This means more money in your pocket, allowing you to spend, invest, and save better. With these new tax reforms, you can enjoy better savings, smarter investments, and greater financial freedom. So stay updated, plan wisely, and make the most of every rupee with Saral Pro, our all in one software solution for simplified tax filing and efficient financial planning. To learn more about tax compliance and how Saral Pro helps you stay ahead, get in touch with us today. Thank you for watching.